Hello, everybody. Happy holidays. All right, so what I'm going to do is focus on crude oil and basically do a study. This study will focus on using wave charts along with support and resistance. All right, so anyway, so basically the idea here is the first thing you need to do is, as David Weiss used to say, you know, where to find trades at the edges. What are the edges? The edges, or where to find trades, are basically tests of breakdown and breakouts. The other are just support and resistance. So you have in trading ranges, the edges are just your support resistance. And in trend, the trading ranges are the trade location is test of a breakout breakdown. That's it. Nothing rocket science about it. So those are the two spots. Then on the test, you have to watch the behavior on the test and determine whether there's, whether supply has come in or demand has come in, and then basically determine if a turning point has occurred. So basically two things. The primary thing is location, meaning at the edges, looking for an edge to trade, and then that edge, and by edge I mean the support and resistance or the test of a breakout or breakdown. At those edges, you look for at supply demand behavior. That's all. There. So crude oil, first thing you're gonna notice, I have the daily on the left, the middle is the hourly, and the right hand side is the 5-minute. All right, so what you have here is the market was going down, and you see that pressure over here is a little bit, there's some effort here, there's some dullness, there's some effort. All right, why? Because you have a significant amount of volume, it does some damage, meaning, but if you take a look at it, it just does enough to cause a spring. See? So it goes down, bang, right at the spring. The more important part is if you take a look at the daily, it's right across this edge. That, I'll start again. So I'm going to go for the daily first. Here you have a breakout, right? See that breakout? Where's the breakout? Breakout is right here. All right, how do you know it's a breakout? A price and volume increase. That's it. Takes out the resistance area with increasing price and volume and has follow through. So it's a breakout. No rocket science there. So what you're going to do is look at the test of the breakout. All you got to do is draw the line across. And this is good because this breakout is coming from, it's not just a pullback, it's a significant amount of consolidation here. See all these bars clustered together? There's some base there. Right here, all these bars, they're tightening. There's a base there. Anyway, so that's your breakout. And now on a test of the breakout, now I'm going to go to the hourly. On the hourly, it basically goes down here. Bring this down a bit. And when it drives down again, there's a spring. There's a spring right there, and it reverses. When it reverses, good volume comes in. You can see that the volume here is bigger than 1, 2, 3, 4, 5 waves. All right? Okay. So basically, from a support level on the daily, we look at the hourly and see there was a spring and a strong rally from that spring. All right? Now I'm going to take the same approach from the hourly to the 5-minute. Hourly now also has a breakout, right? So what I did here on the daily is show the breakout and a test. The same thing with the hourly. If you draw the line, it's the same drive down to test. And now the fun begins. All right? Because, first of all, where's the breakout? Obviously, it's right here. So I'll just mark it. It's the same thing that I'm doing, that I did on the daily. It's doing it on the hourly. You can see, you know, 10, hinge, bang, breakout right here, increasing price and volume with follow through, goes down, up, down to test, right? Now, what's going on this test? In order to determine that, you always need a higher time frame and a lower time frame. It cannot use without higher and lower, because one time frame, meaning a higher time frame by itself, just doesn't show you the details. You need to see the details to judge the presence of demand. I know everyone says, oh, you know, just look at a bar and there's some stupid candlestick pattern or something like that. It's not enough, and those patterns are random. You need to see the process of demand overtaking supply, or supply overtaking demand at a level. So as price goes down, I'm going to show this piece, this swing on the 5-minute. So you could see this piece, this swing, as a trend, and see the turning point of the trend on the test of this breakout. So I'm over here, all right, on that middle chart, the 60-minute, and now I'm going to move over to the right and show what is going on. All right, I'm going to show it as a trend, show that swing on the 60-minute as a trend on the 5-minute. So mark this. Clearly, this is your change of behavior, or called sign of weakness, right? So 14 down and about 7 up. That's about 50%. You know, that's good. So it goes down and breakdown. All right, so we are in a downtrend at this point on the 5-minute on that right-hand side chart. You have more volume down, less volume up. The distance and volume of the down waves are greater than the distance and the volume of the up waves, telling you that the trend is down. When that changes, the trend goes up. Again, the distance and the volume of the down waves is greater, as you can see 10 and 7, than the up waves. Consolidate and down. The distance and the volume of the down waves is more then the distance and the volume, here you have that diversion, specifically this. So this is where you have to be really careful, because looking at this, it looks like effort, but it's not effort. All right, the distance of the down waves is $4, 500 contracts. On the pullback, you have only $2, $2 pullback, about 50%, but a whole lot more volume. So that volume is 8, meaning 800. So you're thinking, oh yeah, that's a lot of effort and that's bearish. But this is where the market is tricky. It's not going to reveal itself until later on. This actually is preliminary buying. This here is preliminary buying. And there are subtle clues. The first being that actually this bar here was a climax. This bar here is actually the climax. As you can see, the volume is very high. And that's why you have some type of buying over here. So I mean, that's the subtle clue that says a lot, but you only find that out later, because if you're looking at this from the perspective of a downtrend, what comes to mind immediately is that it's a breakout, meaning break out to the downside. But understand that, you know, you have to always see the double meaning, and sometimes that second meaning is not apparent until later on. So, you know, you just have to wait, because your mind has to be flexible to determine, oh yeah, this wasn't this, it was that, and be able to, at a snap of a dime, a snap of a finger, change. So over here you had this, and then this is not lower volume. So you just put this here. You could think it's effort for the time being, so just put some indicator there that says it's you know, dull or whatever. Then it goes down on 3, and you're going to notice that it's going 10 and 4 and 5 and 3. Huh, what's going on? All right, is it a consolidation? Maybe that's why it's doing it. You know, and again, you have that heavy volume and price down. These are all like minor, really minor climaxes, where they're trying to end the trend. So that's why you have these spikes. But anyway, so over here is where you get a clear indication when it tests on the 60-minute that buyers overtly are coming in. They are coming in, and this is evident in the volume buildup. It's not a 1 bar volume buildup, it's a lot of bars volume buildup, right? So here you have your change of behavior, and you always want to be reading it. Do not rely on indicators. There's a reason for that. If you cannot rely on indicators, because indicators will not give you the understanding, and if there's no understanding, there's no confidence. If there's no confidence, there's no way you'll ever be able to trade. There's a process where the intuition, like the understanding, must be built in order to execute. But that's an entire separate story. Anyway, so over here, you had 14 down on the original change of behavior, right? You want to keep that in mind. Ding-a, 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 ding, and bang, 18 up on this bullish change of behavior, which is also, I think, the biggest volume in 15 waves. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, maybe 11. Oh no, it's 15. 11, 12, 13, 14, all the way up to here. So what's that telling you? All that volume coming in. Obviously, it's buying. Like, get it? It's buying. It's the biggest volume. All these bars are accumulating that volume, And you want to be able to see the bar volume here is also spiking. See the bar and the range, which is the speed or activity of the bar, whatever you want to call it, is spiking on the upside now, right? So this is the overt clue that demand is coming in. Overt clue, demand is coming in. Now, you gotta wait for the test. Pull back on 3 and 4. I mean, what else do you need? What else do you need to know? If it's 18 up, 3 down, goes up again on 5, goes down on 4. Look, what else do you need to know? Do you think that this is bearish anymore at the point where there are 2 tests for supply and the ratio of demand to supply is what? 1 to 6. Here it's 4 to 4.5. So up volume is greater than down volume. It's bigger in what? Distance and duration. The up waves have greater distance and duration than the down waves. Actually, it's distance and volume. It was originally duration, but now it's distance and volume. And this is telling you the trend has changed. The preliminary indication was right here on this 8. This is where they started, like off of this low, the buying started. Anyway, so now it's going, you have a base forming, nice little base forming, right? With these resistance points, these 3 resistance points, you have some cause, and then you have a rally breakout, and that's your higher high confirmation. Now, at the same time, remember, you're at this point here, it's testing. So you combine the test of the breakout with the turning point that brought in the presence of demand on the lower time frame against a test of the breakout on the higher time frame. With the elements of the turning point that include everything from sign of strength or whatever you want to call it, COB, feathers weight, low, LP, LPS, or you can just view it simply by looking at the numbers and seeing that this is 18 and this is 3 and 4. Obviously 18 is bigger than 3 and 4, and I just tell you without using any terminology that up volume is greater than down volume, and up volume is demand. Therefore, demand is greater than supply. When demand is greater than supply, price goes up. And you know, anything can happen. So you have this breakout, and you have this rally, and then you have this pullback. The pullback here, you see 9 and 4, you know, $904 up and $904 down. All that's telling you is that it broke out and it's testing a support again. All right, it's testing support again. This low is 47.72, and this low is 47.72. You get a full test, and that's it. So sometimes, you know, you have these rallies that set up and then they're just sold off. So you don't know what's going to happen. You just have to be able to cut. In this case, this pullback here went all the way down. Typically, like when it does that, they try to do like a shakeout or whatever, stop run, because there'll be stops right under here, right? So bing. Anyway, and now the market rallies. So the question here is, you know, there's a lot of buy points. You know, the breakout here is a buy point. On the pullback, the consolidation right here. You know, so yeah, it's right here. It's like a mini, you know, setting up the 1, 2, 3, 4, 5, 6 hinge, and then pop, hinge, pop, hinge, pop. So long story short, on the hourly, all I did was, if you remember what where do you look for trades? You look for trades at the edges. What are the edges? In uptrends and downtrends, they are the retest of a breakout or a breakdown in a downtrend. So retest of a breakout in an uptrend, a retest of a breakout in a downtrend. So basically just retest of a breakout. That is your edge. In sideways trends, your edge is, or where to find trades is, at support or resistance, which is at the low or the high. I mean, just the wave high, the wave low. That's it. So that's the location. And here I explained in this study the turning point where demand overcame supply. That is the turn. The turn from what to what? From supply to demand taking over. That's what turning point is. That's what you have. What were the key elements? The key elements included preliminary buying. They included some bars that were spiking on volume because there's ending action. Actually accumulation on these moves down. Then the turning point would include change of behavior, LPS, higher high confirmation, full test, etc. And more importantly, understanding that when these turns occur or when these trends occur, you will have situations where one thing looks like something else, but the chart will not be able to tell you what is what until later. Here, this has all the elements of a breakdown, and effort on the bind. Anyone who sees this sees a downtrend with these averages, the green and red averages, sees a breakdown followed by a test of the breakdown on a lot of effort, and will say that this is effort reward or dullness. However, the chart cannot, that is one interpretation. The other interpretation is this is a minor climax, not a breakdown, but a minor climax followed by strong buying that is indicated here. Which interpretation is correct? And the answer is you don't know. Anyone who tells you, look for this, this, and this, it's not, you don't know until later. When is later? All the way here. All the way here. Before that, you do not know. It can have both bullish and a bearish interpretation. This is the problem. That when you're reading charts, they can have both bullish and the same behavior can have bullish and bearish interpretation. What does that mean? That means you gotta wait for the move to happen so that in hindsight, you know what it was and what it is and is not, so you can get in on the test. There's nothing wrong with understanding this in hindsight, and there is something wrong in not changing your mind. If right here you still believe this is effort, there's the problem. Here, if I looked at this, I would say this is effort reward. Here, it's not effort reward. It's preliminary buying. What is the problem? Sticking to my guns and saying it's still effort reward, and instead of changing my mind and saying that this was initial buying, preliminary buying. So again, in these situations, the same price volume behavior can have multiple, meaning two meanings. One is bullish and the other is bearish. This will always happen. But later on, price and volume will tell you what it really is. And there's nothing wrong with then changing your mind. But the problem is if you don't change your mind and stick to it, then this is probably the major reason, because people view this as being wrong. It's not that you're wrong. It's just that the price volume behavior is just giving you the best, you're making the best educated guess about what this is based on the price volume behavior that can be interpreted in both ways. That's all. And when you realize that, um, everything will start clicking. So, and so that key personality trait must be developed by Wyckoff traders, in that they can't just look for springs and upthrusts. You have to be able to what was called like flexibility of mind. Anyway, I am done. Take care.